It's not going anywhere. So we're going to take a look at the current weather environment. In other words, the cloud environments. I think it's somewhere around March 10th. I could be off by a day. Doesn't really matter. FX Street will post that information later. And so this is a class on Ichimoku Cloud trading, hence the name of the weather report, because we're going to look at the basic cloud or environments and what kind of atmosphere we have for these trades and these pairs to see where we expect them to go, what we expect them to do, whether it's a good trading environment, whether it's a clear trading environment, or it's cloudy. And so let's talk about that as a whole. Now, we had a request right off the bat. Forex Champion just came right out of the gate and said, can you please review briefly yesterday's pound US dollar trade on the 1 hour? Sure, let's do that, and then we'll get into material. Okay, so this is a pound US dollar 1 hour trade. I'm assuming you're talking about this particular drop here, yes? Was that what you're talking about, Forex Champion? Yes, okay. Well, let's zoom in a little bit and let's take a look at this. This technically is a weak signal by all definition. And even though it produced, a lot of pips, I still don't take trades like this. I don't take weak signals. Oh yeah, thank you, Spartacus. I appreciate that. And while you're telling me that I need the 20 EMA, my phone is telling me it needs some battery power. So we're going to give it the mojo there. All right, and 20 EMA. Spartacus, were you employed by CBJ to always make sure I get my 20 EMA on? You and Boyke? And color needs to be blue, and thickness needs to be thin. Okay, great. Boyke's got minions now. Fantastic. All right, so yeah, this is a weak signal. It's a weak signal because it's a crossover above the cloud, and therefore it's giving a signal above support. I'm generally not a fan of giving sell signals above support. I'm generally a fan of giving them below support, and that's why the cloud generally wants you to take medium and strong signals as a whole, or at least clear through the cloud, because as that happens, then you've cleared through the support or resistance, because that is what the cloud represents. The cloud represents support and resistance, and it's evolving. That's why it changes shape and size. Some key notes about this is that you notice how thin the cloud was and how easy it was for it to just dice back and forth between it. With that being said, when the cloud is thin, you have a much greater probability of it dicing back and forth, because the cloud is thin, therefore there is not much support or resistance. It's not very tangible. It's pretty weak as a whole. And so with all that being said, technically, there's not much to say about this according to traditional Ichimoku trading, because it's not a valid trade. It can be if you are part of one particular camp. There are some camps that will take any type of crossover, but they'll apply certain parameters or filters after to make sure that that weak signal is a trade we're taking. I'm not a big fan of it. However, I do kind of have some exciting news, which is that, I don't know if you know, but there's only, as far as I can tell, in the entire trading database out there, there have only been 3 books ever written about the Ichimoku Cloud. The guy who invented it, Koichi Asada, didn't even write a book on it. He just wrote an article and published it, basically. Published his findings. He wrote several other articles about it, but he never wrote a book about it. The first person to ever really write a book was named Hidenobu Sasaki. He was considered the, how could I say, the master chart technician of the Ichimoku Cloud. He wrote a book called Ichimoku Kinko Studies, and it was published by Raider Publishing in the earlier mid-90s. They went out of business in the late 90s, and that book is a staple in the Japanese trading rooms. It's an absolute staple. Well, needless to say, it was never translated into English, and it was only written in kanji, which is kind of a more obscure form of Japanese. I mean, you got several different writing forms of it, but anyways, it was written in kanji, so it's a little bit harder to translate. unless you know all sorts of Japanese languages. But the bottom line is that you couldn't even find this book, anywhere in the world except like in Japan. So I had a minion, good friend of mine, a very good friend of mine, in Japan, and I've kind of had him looking for a year, and he finally found it. And so he just FedExed me a copy today, and it should be here like tomorrow or something like that. I have no idea why he paid for next day shipping, but oh well, c'est la vie. So he did anyway. But anyways, it's really exciting because this is considered the Bible amongst the Japanese trading rooms, and I've been waiting for a year to get it. And so it's on its way, and when it comes, I'm going to just scour through that thing, and you never know. Ichimoku Cloud trading might change significantly based upon my readings of this. I kind of hope it does to some aspect, but at the same time, it could be anticlimactic, and maybe one of the situations where I read it and it's just saying the same stuff that I'm saying. So I hope it's not anticlimactic. If it does, I'll probably have a chuckle about it, and hopefully you guys will have one too for me. But I have a feeling it's going to be quite insightful, and it's going to affect my overall trading. But right now, based on how I trade, I don't trade weak signals. I only do medium and strong signals. And the other great thing about this book coming is that once I've scoured through it, then I will be writing a book on the Ichimoku Cloud, because there's only been 3 as far as I can tell. And only 2 of them were about Ichimoku Clouds directly. One was by Nicole Elliott. It's called Ichimoku Clouds. And I thought it was a good introductory book, but I found it pretty basic. And I thought it kind of got off course. And it missed several key points of the Ichimoku Cloud trading. She has absolutely brilliant insight in terms of, interpreting the cloud and what it's saying and all kinds of information. Absolutely brilliant insight on it. She's just absolutely great at it. But she kind of, I think, in my opinion, she just left out massive pieces of information about how to use it and trade it. And she added some other things about Fibonacci time parameters and Elliott wave. Don't get me wrong, it was all cool, but I think it would have been better if she had just focused on that. Write an entire chapter on the Kumo and how to interpret it. Yeah, I'm going to be writing a really, potent book on it. So I'm actually about 1/4 done with my other book, so I'm not sure how I'm going to write them simultaneously. It's going to be very interesting. But yeah, so I'm uber excited about it. Now, do I read Japanese, and how's my Japanese reading skills? My Japanese reading skills are on par with a 3rd grader at best. So that being the case, what I'm going to do is go to the local university here, and I'm going to go to the language department and see if I can find some interns here that specialize in kanji, and then see if they'll translate it, and so pay for them to translate it and have it done, and that's it. Supposedly there's not much words in the book itself. There's only some words and lots of pics, which is good. That's what I want, and so, but at the same time, words are good because I like descriptions. So anyways, yes, look at the pics, laughing out loud. So yeah, so I'm just uber excited about it. This is a huge breakthrough. This is something I've been waiting for a year. I can't even tell you how many times I would just contact him and talk to him and ask him about, hey, can you look at this, can you find it? Ironically, he went to go find Hidenobu Sasaki, the guy who wrote this book, The Absolute Bible. And this guy has actually won several technical trading awards, for calling certain changes in direction, saying, hey, this is going to end here, this market's going to shift here. He's won several awards for it. He worked at all kinds of big places. And he passed away a year ago. He went to the place he was supposedly at, and they said he passed away. But they knew where to get his book. So I was very sad. I wanted to meet him because he was the guru of it, and I actually emailed him 6 months ago, but I was 6 months too late. So I'm kind of sad that I didn't get to meet the grandfather of it, but oh well. Hopefully I can carry on the tradition. Go figure. Kind of like the last samurai was a white boy. Maybe the last Ichimoku Cloud trader could be a white boy. All right. So moving on here. So yeah, hopefully, does that cover your information there, Forex Champion, about the pound US dollar? I think we covered it. But while we're here, and while we're talking about the cloud, and while people want to know about the cloud, is there anybody here that this is your virgin class with me? Anybody here that you have never seen me before, Um, I have a feeling there's at least one or two. The Are You Not Entertained? That's pretty good. That's a good name there. Anybody here that this is your first time? I think I remember almost everybody here. And you all are very familiar. Wow, nobody new here? That is impressive. Well, then that means if there's nobody new and nobody speaks up now, then I'm just going to dive right in to the cloud class for today. So there's a couple things I want to talk about within cloud trading, and combining it with CCI and just cloud construction as a whole. We tend to see certain cycles inside the Ichimoku Cloud, inside particular price action as well. And I want to start off with the pound yen. Okay, so what we are seeing here, so we are kind of seeing a pattern here in the pound yen. We're clearly seeing this triple top here, and we're clearly seeing this double bottom here. But there is a couple interesting things in between there. First of all, if you take a look, actually take a look at where the most recent sell signal was in the pound yen. It was a strong sell signal right here, and it happened right about 138.60. It was a strong sell signal because it was below the cloud, and the thing just went on a peregrine falcon dive right down toward the triple bottom. There's actually one more bottom that you don't see off the charts. Just trust me, it's there. But this 135.60 area, it dropped for a 300 pip run. And it started that same run with a strong signal below the Ichimoku Cloud. Cloud construction at the time was beautiful. Let's zoom in, and why was it beautiful? And why was it good for it? Well, if you take a look at it, the cloud had already crossed over from the Senkou Span A had gone from positive to negative. So that's very favorable. That means it flipped, and the belly side was on the right side for us, which is really good. Belly side means, is the Senkou Span A moving in the same direction and on the same side as the cloud as where your trade is going to be going? So if it's a downward crossover, we generally like it if belly side is down. If it's an upward crossover, we want belly side up. That's much more favorable. And belly side refers to where Senkou Span is. Okay, now, if we look at it, not only at this time period that this crossover happened, was the cloud getting thicker, but the cloud was falling, which means that as the thing went on in time, resistance would be falling. That's the ideal type of position we want for a cloud. So this is a very good situation to be in, and look what happens. Boom, it crossed over, went up a little bit, and then just dropped like a rock. This is the first time it's actually crossed the Kijun line since then. So with that being the case, this would have resulted in a massively profitable trade. But take note as to the general cloud construction, and take note as to the price level. Now we're going to zoom back a little bit and take a look at where the last strong signal to the downside was given. Go figure, right at the same level. So even though we're not in a trending environment, so you have one here, and if you look straight back, boom, exact same levels. And take a look at the patterning within the price action. Hits a top, sells off, bounces a little bit, comes back down. Same thing here. Hits a top, sells off, bounces a little bit, activates a strong signal. So the patterning was the same. Even though we're not in a trending environment, this thing was able to pick up swings in a larger range environment. We are in a range technically. We're stuck between, if I zoom out just a little bit further, we're kind of stuck between this 135.60 range and the 140, almost 142 flat. We're really stuck in this kind of range here. And when you get into wide ranges, look for cyclical patterns within the Ichimoku Cloud. You'll oftentimes see, if there is, double and triple tops, you will oftentimes see situations where it'll give a sell signal, and then it'll give another sell signal around the same level. When you have that kind of patterning or cyclical nature, along with the tops or bottoms being relatively uniform, the trades will generally perform the same. And if you look in a little bit further, they pretty much did. This one sold off right at almost the exact same price level, give or take maybe a few pips. and would have exited somewhere around here on the final lot. Actually, this one would have done it. This one has actually hung a little bit more to the bottom. But it pretty much went to the exact same target in terms of a longer target. I personally, I missed this trade because it happened during the Sunday session, and I was detained at that time. Actually, I was soaking up some sun. Since I've been back from Argentina, the Bay Area hasn't exactly been too sunny, and we've had sun the last few days, so I took some time off. But when you kind of have something like this and you have a double bottom and then you see kind of the market respond to the exact same price levels, that's usually a good time to say, okay, you know what, time to exit the position, basically. You could wait for a Kijun line close, of course, and you would have, maybe lost 70 pips, but overall you still would have locked in a ton of profit. But the point I'm trying to make is that during wide ranges, the Ichimoku Cloud will often do very, very well at capturing moves inside those, capturing really good swings inside those types of, inside those ranges. And what do I mean by a wide range? Generally 400 or 500 pips in a row, 400 or 500 pips wide. Those are wider ranges, especially when you've had double touches or triple touches on the tops and bottoms. Those are wider ranges. Now, Jack Be Nimble, Jack Be Quick has a question here. Why do this cycle exist in the market? You know what? After 6 or 7 years of trading the currency markets, I try not to answer that question because there rarely is ever one why. There's multiple whys to that. I don't try and spend too much time trying to understand the why so much. Because you know what? I don't know all the reasons why people buy and sell currencies. All I care is that they do. And that I want to know what they're doing and how they're doing it. That's all I really care about. The whys are really unimportant to me. A person can have a million reasons for buying a jacket. But the bottom line is they do. If I'm selling jackets, I want to know, hey, what can I do to convince that person to buy a jacket? I don't really care about the why. I just want to know what can I do to do that. And it's the same thing with trading. So I try not to answer the question of why, because you have a lot of players in this market, both speculative and institutional players. And so with that being the case, since we have a lot of players, worldwide doing this, you're going to have so many whys. So since you can't isolate the individual why, to me it's a non-important thing. What is important is how is the market responding to the price action and where is it going to go? Now, Jack has another question. Is the Kumo good for cycle watch? The answer to that one I think is yes. And here's why. The cloud gives you a lot of information as a whole. There are some generic things around the cloud which tell you what kind of environment you're in. That is part of the reason why you can be very good with the Ichimoku Cloud at kind of giving you cycles or kind of telling you, hey, I think the market's going to do this sometime in the near future. Here's why. Well, according to general Ichimoku Cloud theory, and this is generic, when price action is below the cloud, it's generally in a bearish mode. When it's above it, it's generally in a bullish mode. If the cloud is descending, that further accentuates, and the price action is below it, that further accentuates the bearish conditions. If the price action is above the cloud and the cloud is climbing, then that further accentuates the bullish conditions. So yes, just on a very basic level, the cloud is very good at kind of forecasting where the what kind of cycle we're in, whether we're in a general bearish cycle or a bullish cycle. Let's take a look at this on a larger time frame. Now, as you can see, once this thing sold off and started to sell off massively, this thing was below the cloud for a large period of time. You're talking August of 2008 all the way till early or late February 2009. And if you think about it, it was basically saying, hey, you're in a bearish cycle right now. So this is very good information for us because it's telling us where our general bias should be in terms of buying and selling. You know, if we were in a general bearish cycle and we were selling 3 out of 4 times, we probably would have made a lot of money doing that. If you sold 3 out of 4 candles, you would have made a lot of money doing that. So the answer to your question is yes, Kumos are very good for giving you cycles. But there's a lot more subtle information that they give. One of the things that they do is they can flip. This is where I disagree with Nicole Elliott. But maybe she was saying something more fine of a point. In her book, she talks about, hey, does the flipping of a cloud represent anything significant? And she said, no, it doesn't. Well, maybe she was talking about, hey, if the cloud flips, does it generally have this kind of signal? You know, does flipping of the cloud represent A, B, or C? If she was speaking in that manner, then I can agree with her that flipping of the cloud in and of itself doesn't mean one particular signal. However, the flipping of the cloud and the adjustment of the Senkou Span A, particularly on even larger time frames, you know, 2 hour, 4 hour, daily, weekly, you know, and so on, that flipping of the cloud can actually have some serious information depending on the nature of the cloud. This is an evolving entity. And so there could be times where it could be flipping during a thin environment where that could have really good information for us. It could say, look, you know, cloud is very thin. It's flipped from, you know, thick to thin, you know, and it gets back up to thick again. So if I were to translate this flipping, well, right here, let's take a look at this. The thing flipped to the downside, but it never really actually manifested much of a cloud. The Kumo never really got more than a few pips wide. And on a daily chart, that's nothing. That's meaningless. And so with that being said, the fact that the cloud flipped again and went positive and then continued to gain ground actually became significant. It became significant because it was telling you, hey, this thing has got some upward bias to it or some upward pressure to it. Also, the flipping of the cloud is really kind of telling us some more information on a more technical level. If you think about it, what is Senkou Span A measuring? For those who've been taking my class for a while, please, what does Senkou Span measure? You should know this answer. And don't try and go online to some website and try and find out. You have about 15 seconds to answer this question. If you can't answer in 15 seconds, then for all of you that have been watching my class now for 6 months plus, we need to talk. I'm wondering what you guys were doing during my classes. So anyone? Oh my, I am concerned. Last 9 periods. Well, Forex Champion, that's not the correct answer, but I am going to give you credit for at least trying. Nobody else is answering the question. Oh my goodness. So, all right, I'll try not to take that personally. But the Senkou Span A represents first time here. Okay, Hector, you are forgiven. Apologies, Senkou Span A. Senkou Span A, which is the white line, represents the halfway point between the Tenkan and the Kijun line, the white and the red line, shot 26 time periods ahead. So it will always evolve. So if on a technical level, Senkou Span A, oh yeah, apology, there you go. We know you got that off a website. I know you did, especially since it took you that long. And even the way you wrote it. All right. But Senkou Span A represents this halfway point, this 50% point between these two moving averages. Tenkan line is a 9, Kijun is a 26. So if the Senkou Span flips and changes direction, well then that actually has some meaning on a technical level. Because what it's saying is the moving averages are changing swing direction. They are accelerating to some degree. The only way moving averages can adjust is if price is adjusting in that level. And if the halfway point between these two, particularly the Kijun line, is adjusting, which is a longer period moving average, and on a daily chart it's a 1 month moving average, well then, that Senkou Span A actually has some good information for us. It's telling us there's kind of a short-term changing of the guard. So to me, that does have information. Senkou Span B is the last 52 candles, taking the high and low, and then plotting a halfway point between them. So you have an evolving 50% Fibonacci level. And if that starts to change directions, well, then that has some information to me as well. Now, Senkou Span B has not been changing directions, which means the range really hasn't changed at all. If the range hasn't evolved between the high and the low, has not changed 1 pip, then Senkou Span B won't adjust by 1 pip. But if that range adjusts either to the top side or downside, then Senkou Span B will have to adjust. So to me, there is information in the cloud flipping. It can represent the possibility of a changing of a cycle to some degree. Maybe a little late to the party, but it does have that information. So hopefully it answers your question on whether, Jack, hopefully it answers your question on whether the Kumo is good for a cycle watch. That was one of, and this is something I hope to find out more, but supposedly, howdy Glenn, good to have you here. Supposedly, the ability to find cycle changes, you know, when markets are shift or most likely to shift, was one of Hidenobu Sasaki's special talents. He was very good at writing articles telling you, hey, there is a likely cycle change right around this place and this time. And part of the reason why he could do that was because he was very good at analyzing the cloud. So it goes. So the legend goes. So, and for champions, so generally, when does price action catch up with when the Kumo flips? So, okay, it sounds like a question, but it also sounds like a rhetorical statement. Generally, when does price action catch up with the Kumo flips? You know what? Generally, the price action is going to be ahead of the Kumo flip, more times than not, whether it's in 1 day or 1 hour. Here, price action has already gotten below the cloud and then it flips. Generally, the Kumo will flip after. So it's generally a little late to the party. However, the shape and nature of the Kumo is what can give us a lot of information as to when a likely reversal point is. The distance to the Kumo can have some information. Here, the distance is relatively consistent the entire time. But notice how the price action starts to flirt a little more with the Kumo. Here it gives a little kiss, and then the sell-off is not that bad, and then it's coming back for more. So go figure that it never really broke through the Kumo during this really thick phase, but it broke through at the thinnest point in the cloud. So that gives you a lot of information as to when it is more likely to break through. It had several opportunities here and here and here, but just didn't do it. So distance and thickness or thinness of the cloud can give us a lot of information about when it is very likely to reverse directions. This works on pretty much almost any time frame. Let's zoom back here. Take a look at the times that the cloud was most violated. Here was boom, 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 all very thin portions of the cloud. Here, it tried to make it through a decently thick portion of the cloud, and it took time. It took a lot of time. Whereas when it was back here, it didn't take any time at all. Just diced right through it like Swiss cheese. But here, it took an exceptional amount of time. This is a 1 hour chart, so 3, 6, 9, 12, 15, 18, 19 hours roughly. 19 hours it took to make it through that cloud. And go figure, the cloud was thicker at that time. Same thing happens up here. Cloud is pretty thick. It's not saying it won't reverse, it's just going to say, hey, it's going to take a lot longer if it does. And look what happens. 3, 6, 9, 12, 15, 18, 19 hours. Again, roughly, give or take an hour, before it finally makes it through. So, that's very good information for us. That's immense information for us. I mean, let's take this even a little bit. Sure, let's go to a 15-minute chart, which I generally don't apply Ichimoku Clouds on thinner time frames. But you're going to find a similar pattern. Take a look at this. Just dices right through. Boom. Cloud very thin. Cloud gets very thick. It gets into the cloud. Takes a long time to get through. Cloud gets very thin, flips through. Cloud thin, flips through. Cloud thin, flips through. Easy. A little bit thicker cloud, doesn't quite make it. Thin cloud, no problem. Thin cloud, no problem. Thin cloud, no problem. Tries to make it through, takes a lot longer. This works on any time frame, except for maybe the tick. I don't know. I've never pulled up a cloud on a tick chart, and good God, if you ever catch me using a tick chart, then please tell me I told you so or something like that, because I try and avoid that like the Black Plague. But this Kumo is an exceptional tool in and of itself, aside from the fact that this thing will give you signals along the way, buy and sell signals. This Kumo is an elegant piece of technical information. There was this time when, let me show you something here. Oh, this may not work. Okay. And was it the QE yen or the QE dollar? Give me a second to figure that one out. I'm trying to think of what it was. There was something on the weekly chart. Okay. So this is the euro dollar on the weekly chart. Notice how it had good spacing and distance from the cloud the entire time. Then the distance started to gain and the curvature started to get parabolic. Thing double tops and in one fell swoop breaks through the thinnest point in the cloud. If you look a little bit closer, it actually went to re-attack the cloud. And then after that, boom, it never came back since then. Oftentimes, you will see that major breakings of the cloud, when the thing has been in a long trend, whether it's on a weekly chart, daily chart, 15-minute chart, whatever, that when you have consistent and prolonged spacing between the cloud and the price action, and the thickness is generally consistent, that usually once you kind of break that cycle, that it usually indicates a major turning point in the pair. And that's what we're seeing here. Same thing happens, in weekly time frames. Weekly time frames, it's very good for giving cycles, major cycle turns. One that it was excellent on was the pound yen. Once it got below the cloud here, it's never been back, and it's been like this for now over a year and a quarter, almost a year and a half. And go figure, we're in a general bearish cycle right now. We still got massive distance to the cloud, so overall, selling is much more preferred than buying. This is very powerful information for us. Sell signals or buy signals on the weekly chart are massive, massive signals. The last time we got a sell signal on pound yen was a crossover right in the 195 region. And to this day, if you had followed that signal, you'd still be in this thing. This thing has not even come close to the Kijun line. And here we are, 136. You're talking 6,000 pips later. This is massive. Absolutely massive. Now, one thing I would like to note is that the cloud isn't the only thing that gives a ton of information. There are these two lines here that give signals, buy and sell signals, based upon their crossing over. This white line, the Tenkan line, and the red line, the Kijun line. However, they don't just give signals. They are scouts, if you will. They give information. This right here is your first scout. It's kind of giving you an early warning beacon. The Kijun line is kind of like your second scout. It's the one a little bit closer home saying, the redcoats are coming, the redcoats are coming. And then the cloud is kind of like where the castle is. This is, where all the final defenses are. And once this gets breached, you have an invasion, basically, and that trend is over. So Think of these things as scouts along the way, telling you where the overall price action is and what kind of danger levels you're at. You know, right around here, you're at DEFCON 5. You know, once you start to breach this, you're kind of at DEFCON 4. You breach the 20 EMA, you're kind of at DEFCON 3. You breach the Kijun line, you're at DEFCON 2. And when you get to here, you're at DEFCON 1. You're at full battle. Your defenses are seriously under attack, and you increase the probabilities that a reversal is going to happen. Now, there's other variables in play, but the bottom line at that point, you will have if you were short, you will have wanted to have taken profit with this thing attacking the cloud. You'll have wanted to take a profit well before that. Now, if you're in a trade and it's gone negative, you're going to want to use the cloud as defense. But the bottom line is that all of these have information. So analyzing this on this time frame, well, for the last, since August 29th till early February, this thing's been behind the Kijun line, or the Tenkan line. So that means the selling pressure was full on. This thing couldn't even get to the other side of the Tenkan line. So I only wanted to be selling during this time period. Now, as the thing crosses the Tenkan line, notice how it's starting to treat it as support and trying to make some upside headway. Well, with that being the case, if we're selling, we want to sell a little more cautiously. But the bias is still much more towards selling than buying on this particular time frame. As soon as we break through the 20 EMA, then it's becoming a little more mixed. And once we get past the Kijun line, we really don't want to be initiating any new shorts at that point. We'd want to wait till, you know, kind of cloud barrier touches or something like that. Well, let's take a look at this on a shorter time frame. Take a look at this here on the most recent sell-off. It sells off around 138.50 roughly, and it stays behind the Tenkan line for almost the entire time. One little foray here, but the selling pressure is on. We have really no business to be buying the pair at this point. Now take a look at what happens here. Starts to march, and very quickly it attacks Tenkan, 20 EMA, and Kijun. Goes right towards the cloud. At this point, we will have wanted to take our profit if we were short. We really would no longer want to be in the position at this point. But as you can see, we initiated another signal, technically, and it should have yielded us some sort of profit in there at this point. It's a little choppy, it's a little messy. But notice how with the falling cloud, we've had attempts to get to the cloud, but we just couldn't break it. And so the Kumo has offered itself up as a defense system, so to say. Jerry G has a question. Does the widening gap between the Tenkan and the Kijun show greater tension, which results in a closing in the gap between them, and maybe a signal to lighten up on part of the position? It's a very good question. So if I understand it correctly, this widening of the two as it happens right over here, does this show greater tension? Actually, what it shows is it shows more impulsivity when they separate. And since it's not only separating, but the price action is only staying on one side of the Tenkan line, that shows more impulsivity to the downside. And go figure, this is a shorter moving average, it's a longer moving average. The basic theory of moving averages is that as they separate, the further they widen out, the stronger the price action is getting in that particular direction. So if at any point in time you see these two separating and you're thinking about buying and going against this, I'd think again. I would seriously reconsider. Now, when moving averages go flat, then you have a greater possibility that it could reverse to the upside. Because the moving averages are flat, there's no acceleration of price in one direction or the other. If there's no acceleration in one direction or the other, then we have an environment which is very healthy for us to be, or it's healthier for us to be buying at that point. Still not the best. The best is when they separate to the upside and then they accelerate in that direction. So the answer to your question is, I would translate greater tension for more impulsivity. Then what happens when they start to come back together, that's less impulsivity, that's less consistency in the order flow, and that means that the environment is no longer supportive or less supportive for the pair to continue moving in a direction that we want to. So when the Tenkan and Kijun start to come together, yes, it's a good time to lighten up the position. Especially when price action stays on one side of the Tenkan, then gets on the other side of it, and then attacks the Kijun, gets on the other side of it. That's a really good time to lighten up positions, if not exit them at that point. So hopefully that answers your question there. Does that cover it there, Jerry? I'll take one last sip of my tonic here. Okay, I'm going to take that as a yes. You're silent. Cool. All right, fantastic. All right, so with that being said, we've covered a lot of material, particularly on the nature of the clouds, what we want to look for, the Tenkan and Kijun line, separation, coming together, space and distance between price action and the cloud, price action coming together. Taking a look at this here, price action was away from it. Now it's getting a little bit closer towards it. So if I'm considering selling, I'm going to be a lot more cautious here. Now, granted, this cloud is massively thick. So if this thing is going to reverse, it's got some work to do. Throw that in with some pivots, and it's got a lot of work to do. This M2 pivot is definitely offering itself up as resistance in the short term. And then you got the daily pivot, which it hasn't even seen today. So using the cloud for this here, in the short term, this thing doesn't have that great of possibilities. I seriously doubt by the end of New York, this thing will be above the daily pivot. Now, something could happen, some sort of fundamental event that can just throw everything off. That's a possibility. But you should be able to see it in some sort of impulsivity. But if things continue as they are, it becomes less likely that in the next 4 or 5 hours, this thing will make a major move above the cloud. And if it do, it's going to have to work real hard. However, the cloud is getting much thinner as time goes on. And so with that being the case, as this thing meanders for a little bit, the chances for reversal to the upside are greater. Also considering the fact that we've landed, and again, another double bottom, and we're spending a lot more time to the cloud, the odds are slowly shifting towards a decent or greater possibility of reversal for the pound yen. And it would make sense if it's going to do it here. Not only a pivot, but a triple bottom. We got one last question here, and then I'm going to wrap things up here. But Forex Champion says, since the future Senku span A is a bit flat on this one here, does that mean that any future sell signal will not be a strong one, even though we are below the cloud? There's no way to answer that correctly because we have no idea exactly what price is going to do. Price could fall off and then give a signal here and then come back down, an upward crossover and then a downward crossover below the cloud. So it could give a strong sell signal. My suggestion would be wait and see. Because it is flat though, the flatness of the signal you can still have a strong sell signal and the cloud be flat. I mean, right here, we had a crossover and the Senku span A was flat. In fact, the Senku span A was belly side up, not belly side down. So you can have that. You can definitely have that. But if the Senku span were to decline, it would mean it's a stronger signal. So hopefully that answers your question there. It does not necessarily preclude it not being a strong signal. We're going to need to see where price action is. But the only reason why the Senku span is flattening is because the price action is choppy and in a range, it's going sideways. And so, awesome. Feels like I answered your question. Okay, great. With that being said, I'm going to briefly go over the hit list of what you want to watch out for today and for the rest of the week, possible signals. The euro-dollar could produce an interesting weak crossover the downside and then possibly a good crossover the upside. The cloud construction is favorable to it on the 30-minute chart. In the 1 hour, if I remember correctly, it's not that hot. Pound dollar has the potential to produce a nice sell signal to the downside on the 1 hour. there's decent separation of the Tenkan and the Kijun. And the price action is corrective, and the daily pivot is offering itself up as resistance. Plus you have a thick cloud, daily pivot. There is some evidence that, this could be a possible reversal point here. Now, one thing to note is CCI does have 6 bars positive. So according to generic CCI theory, we're technically still in an upward trend movement that hasn't ended. However, none of them hit 100. So the momentum or the upward strength of this move is nothing special. So that is to be noted. We also have a thick cloud over here. So keep an eye on this one for a downward signal, because if it does give a downward signal, it should re-attack these lows around 37.50, 60. So 30-minute chart is one to watch. Or the 1-hour chart is one to watch your pound dollar. The 30-minute isn't my favorite because the cloud gets very thin in the future. And if you've noticed, most of the signals, once London's been closing, haven't been too hot. Now, question here. Has anybody noticed that particular trend? That once the London closes, volatility has been dropping off massively, much more than usual. Does anybody notice? I mean, literally, I'm watching the charts every single day, and as soon as London closes, I'm taking my pulse to see if anything's happening in the market. The New York's just dead. Okay, Greg says yes, you've noticed it. Other people have probably noticed this. Any guesses as to why the New York session is that much more dead? It's much more dead than usual. The ranges in New York are absolutely dreadful. But is anybody, big push before the close, then flat? Absolutely. That's absolutely it. Anybody noticing, anybody have any ideas as to why? 2 to 4 p.m. is, you're saying Forex Champion, ESD is volatile when the Dow falls. We've had days where the Dow fell 3%, 300-400 points, and yet the New York session in the currency market wasn't moving as much. So the Dow's been falling, but the currency markets haven't been moving that much during New York. And Harley's statement, more liquidity in Europe, yes, that's true. That's always been true. But any ideas as to why it's that much more disparate right now? Any guesses? Scared. Nice. Okay, that's one possible guess. What else? Uncertainty reigns. Okay, nobody's really hit it. More fear in Europe. I think there's just global fear right now in terms of the markets. Any last guess? I'll give you guys one last guess. Waiting for Smith. News is done and dusted by then. We've had plenty of sessions before where there was no news left in New York, and there was still plenty of movement. Asia coming soon. Okay, nobody's getting it. All right. Can anybody name 3 financial institutions that have been wiped off the face of the planet in the last year? Can anybody name 3 of them? Lehman Brothers, yes. What else? Bear Stearns. Morgan Stanley. Okay, great. Where were all of those based? Citigroup is still here, but they're almost dust. I mean, their stock was at 99 cents the last I checked. So. Where were they all based? New York, yes. And what kind of banks were they? Commercial or investment banks? They were all investment banks. Exactly. So you have 3 of the largest investment banks, which their sole purpose is not to take deposits and kind of, give you a checking account. The sole purpose of these investment banks is to actually trade investments. You have 3 of them wiped off the face of the planet. No longer trading. So with players like that gone from the market, 3 out of 4 of the largest investment banks gone, and Merrill technically got digested by Bank of America. So with 3 out of 4 of them gone, you have a massive amount of institutional order flow that has pretty much exited the market in a mass exodus. And it took me a while to figure out why New York is so dead. And then it occurred to me, oh yeah, well 3 of our investment banks are gone. 3 of the players that are heavily responsible for massive amounts of institutional order flow in the New York market are just gone. So we're not just seeing a little bit of drop in volatility once London closes. We're seeing a massive drop because there aren't as many people there to take over. So all they've become financial instructors and advisors now. Right. Yeah, I wonder who would offer them a job. Bakers, exactly. So that's why we're seeing a massive drop-off. And yeah, it was quieter before the collapse. It's actually much more quieter now. I've been actually, and you can see this on daily charts. And I'll show you how. ATR has been falling off massively. Once we started to lose them, boom. You know, of course, it got lesser during the holidays, but look at how much ATR is in comparison was. This is the Aussie dollar. The Aussie dollar is moving 350 pips a day, top to bottom. Now it's averaging 150. That means volatility is over 50% down. It is very rare that volatility adjusts 50% inside a cycle that quickly. And the only reason for that is 3 out of 4 of our major investment banks are gone. So that's why New York is dead. There's just not much happening in New York. Right now, the real time to be trading is London. There's really nothing else to be trading except for London. Once London closes, I pretty much watch the markets for half an hour, and then I walk away and I go sit in the sun if there's sun outside. That's pretty much it. I don't even bother trading. So my feeling is right now, I would shift more of your efforts to monitoring London than anything else. This is where the market is. On top of that, you have Bank of America. You know, their market share, I mean, their stock is like around $2. You know, they were at $30 and $40. You have Wells Fargo that's in the $2-3 range. You have Citibank that's under $1. You have all of these heavy institutional players that their valuations are down to nothing. So they're not going to be trading heavy amounts of institutional order flow in terms of currency speculation anytime soon. Then you got players in Europe on top of it that are down. You got Deutsche Bank that took massive hits. You got Lloyd's. You got all kinds of people that took massive amounts of hits. So right now, London is where it's at. UBS, yes. Right now, London is really the only one with a lot of movement happening. It's always been that London had a little more, but now the disparity is that much greater because of the investment banks are now off the face of the planet. So hopefully that explains it to you. Hopefully that's kind of an insight into that there for you guys. Anyways, it's time for me to wrap up. I'm surprised I didn't see the curtain call from FX Street earlier. They're being very gracious, probably because they're being recording this. Anyways, I want to thank you all for coming. First of all, real briefly, before I wrap up, Raghi Horner, excellent teacher, has got a class right on after this. So please stay on for that. The show continues. If you have questions about my services, I just hired a new marketing guy. Second Skies is going to be coming on. All kinds of adjustments to its services and exciting new stuff and changing the website. If you have questions about our services, we offer trade signals, private mentoring, group classes, all kinds of things. If you're interested in that, you want more pips in your trading and you want to accelerate your learning curve, check out secondskies.com and email me directly, info@2ndskies.com. Until then, let's go around the horn and thank everybody for coming.